Hi there, here's another video by Dave Tromp, and this video will be a trading update for week 21 2019. It's an update on my trading performance, and I'll show you what I traded and how I traded it. Before we start, you will find this video on my personal channel and not on the Samurai trading channel that I started. I'm consolidating all my YouTube efforts to just my personal YouTube channel because I feel that it's mostly about me doing my things, and people seem to like this on my own channel, so I'll stick with that. That's against the conventional wisdom of having a channel or one media outlet for some specific subject, but I won't do that. I will just make more videos on what interests me, which is trading, coding, building websites, talking about tech, cryptocurrencies, precious metals. So if you are interested in all of these subjects, then this is the channel for you. Or maybe if you're just interested in a few of these subjects, you can just watch the videos you like and skip the rest. Anyway, subscribe if you want, and let me know if you like this video by giving it a thumbs up. So let's get into the trading review for this week. So let me close out my screenshot of my head and then let's have a look. So let's see, what did we trade? Let's see. So let's close everything out. So we had just one open trade from the week before. That's on the New Zealand USD. Then I entered on the USD Swiss franc, and I exited at a break even. And we had the AUD USD. This trade is still open, and we had the Great Britain Pound USD. And I closed that because it didn't go, got triggered, so there was no entry, and I canceled the order. So let's go back to the charts. Let's begin at the top. Euro USD. We didn't do any trades here. This pin bar formed, or this long wicked bar formed, but I didn't trade it because there was this resistance area too close. So, and it would have been a pretty large stop here. One way to trade this could have been to enter at the break of this resistance with the target over here and the stop here. Still, that would have been a very wide stop, and the risk to reward would not have been as I would like to have it. Mostly I target at least 1 to 2 or 2 to 1. But let's see, maybe price will go up. There's some minor resistance or area here. Some support and resistance zone here. Maybe price will go up, bounce back down here, and then we can trade it from here, maybe with a tighter stop. So let's see what happens next week. USD CAD, Canadian dollar. It's in too tight of a range, still kind of consolidating here, so I'm not really trading this. As you can see, there's like a block going on here, just like there was a block going on here. So it's not tradable for my way of trading, so I'm not trading this. Then we had this trade, the Great Britain Pound USD. We had this pin bar, so I wanted to enter here at the retracement and then trade it all the way down, but it was already traded too much down to over here. Then I closed out this order, the order that was positioned right here. So we're gonna remove this and we're gonna wait for the next trade. Let's see what the next trade could be. Next trade could be a counter trade. same as on the Euro USD, we could see some bounce back to this level. So price might go up, then bounce back, and then we can trade it this way. Let's have a look what happens. New Zealand dollar, US dollar. This trade was going quite well. Let's rewind this trade a little bit so we can see how I saw this unfold. So we had this pin bar. We had this pin bar formed here, and then we had an engulfing bar. Let's see in my notes, how did I see this? On the there was an inside bar on the news. Okay, let's have a look what happened next. So let's go to the next one. Okay, so we had this kind of pin bar, which is also an inside bar. So now I place the stop of a stop entry here at the break, at the low of this candle, with a stop above this level, and then I want to trade it for a 4-to-1 risk to reward. So this is how it played out. Let's go to the next one. So here I got triggered in, then boom, we went nice into profit, some more profit. So if I would have traded it 1 to 2, I would have been out more or less here. That would have been a very good short trade, but I wanted to have more. I saw more potential. So then this happened, a little bit of retrace, and then, oh yes, that's nice, and then the last day it went up, and then again up. This coincided with another trade that got entered on the AUD-USD. There's some kind of correlation usually with these two pairs, the New Zealand dollar and the Australian dollar. Because this one I traded long. Let's rewind that one as well. Let's close that. Let's do a replay for this one. So we're gonna go all the way here, and let's go back and look at the notes. There was an engulfing pattern, and I traded it on the retrace counter trend. So let's look for that engulfing pattern. That's should have been this one. So I traded on the retrace 50%. So I did a Fibonacci tool I used to get in here at the 50% to find the 50% level, and then trade it to this resistance level, which also coincides with this dynamic resistance formed by the moving average. So let's have a look. We got triggered in, almost got stopped out here, but not quite. So it's very important to have this stop at a very precise level. And then again almost stopped out, but we didn't get stopped out, and then now it went into our direction. And at the same time we see the same pattern here, that there's a retrace going on. On the New Zealand USD, I have moved my stop to break even, so I might get stopped out here at break even, so it will be a break even trade, and this one might move up then, I think. So if we get stopped out on the New Zealand dollar, then the AUD USD will go more into profit probably, because there's some kind of correlation between these two currencies. Then let's go back to the USD Swiss franc. I believe I did trade this one, but I got out at break even, and let's have a look at how that played out, or how did this happen. So let's rewind. Let's go to the day before. So this is what I saw. Then I saw this pattern. There's an engulfing pattern, which indicates it's a bearish indication. It's a bearish engulfing pattern, and I traded it. I wanted to enter here at the retrace, 50% retrace, which happened. Again, almost got stopped out, but not quite. And then I saw this pattern forming, which had a long wick to the downside, so which this could indicate a bullish move up. The only thing is, what I didn't quite look at too well was that there's this resistance level, and this indeed could also have indicated some indecision on this resistance level, which could mean a further continuation down, and that's exactly what happened. So that was I jumped the gun here too quickly by getting out at break even. I was afraid to lose money, and when you're afraid to lose money, then you won't make any money. That's again a lesson. So this is what happened. Boom. The next day I would have been in profit immediately, but this didn't happen. This was a zero trade, so a break-even trade. So what can you do? Let's move on to next trades. No more trades that I got into. So let's look at the other pairs, what happened there, and what we can do looking forward to the coming week. Again, I sometimes see trades happening that I am not willing to enter because I already have too many other trades going on, and I want to take it slowly. I don't want to have 10 trades on at the same time. And that's what happened here. We had some retrace to the moving average, and also some kind of resistance area going on here. Like we had some touches here and some consolidation here, and here we had some bounce, and looking back further there was something going on here. So there was kind of an area where we could see a turnaround, and that's exactly what happened. So what I do in these cases, I don't trade it, but on TradingView I just put in the levels that I might want to trade on, and I don't actually trade it, but it's just to learn and see if I got this correct, if I saw this correct. So that's the nice thing about TradingView. You can visually see and place trades, and then see if they would have worked out. So this one would have worked out, but I didn't trade it. It's not in my trading log. So but that's a lesson to be learned. Looking at gold, I saw the same thing going on here. There were some bounces going on here on this level, and there's some pin bar formed here, this one. So I decided what would happen if I would place a stop buy order on the break here of this candle with a exit below these wicks, and then see if I can target this level here. How would this play out? Well, this is how it would play out. It would be in profit. Probably it will stall a bit here, and there's also this downward trend going on. So it's difficult to say, but we have to see what it will happen here. It might break through here, but more likely I think it will do something like this. Let's see. It will maybe go up a little bit like this, and then hit this area here of resistance, and then probably it's gonna go down. I hope not, because long term I'm very bullish on gold. I own gold in holding, so I think all fiat currencies will go down to zero. That's my belief, and I just trade fiat currencies to make money, and then I put the money that I make, I put it in gold and cryptocurrencies. Moving on, silver. Didn't place any trades here. It's still going down. It looks like there's some indecision going on here, so my initial analysis of this would be to have a short trade, something like this. So we have a stop above this level. We enter when price moves below this indecision candle, and we will target the next area here. So we have almost 1 to 2 risk to reward. It's not quite the way I like it. Maybe you could place the stop a little bit tighter, but I don't want to get it too tight. So something, yeah, that's more precise. And here, let's see, we could move it up a little bit, and this we can move a little bit down, and then yeah, okay. So it's very important to be precise, because you can see by being precise with your entries and exits, you get a better risk to reward. And if you get a better risk to reward on the long run, that will make a huge difference. It will make the difference between being profitable on the long run and not being profitable. Okay, so those are the currency pairs and the precious metal pairs. Let's quickly have a look at the gold to silver ratio. Let me see, do I have another one? Let's find gold to silver. Yes, this is the one I use to look at the gold to silver ratio on the long run. And so this is my analysis. You can see the gold to silver ratio is moving up and down, and I'm trading the gold to silver ratio on the long term. So if I would be buying anything gold or silver, I would prefer to buy silver, because the gold to silver ratio is very high. It means gold is overpriced compared to silver. So I would buy silver, I keep buying silver, and then if the gold to silver ratio starts moving down again, I will exchange my silver to gold somewhere around here, and then start buying gold again. And we can continue this well, for many years. The same thing I'm doing with Litecoin against Bitcoin. As you may know, Litecoin is Bitcoin's silver. So let's have a look at that. So you can see here as well, again, like on the gold to silver ratio, that there's this bandwidth that Litecoin is moving against Bitcoin. So here we're kind of in the middle. I think Litecoin will be going up soon, so I'm more into Litecoin now than Bitcoin. But yes, so so I'm heavily into Litecoin. That's my opinion. If Litecoin to Bitcoin price will move down, then it's better to buy Bitcoin again, and or switch your Litecoin to Bitcoin. For now, it's quite even. There's the Litecoin halving coming soon, I believe in 2 months now, or 3 months, and that usually gives a big boost to the price of Litecoin. So that's why I'm buying Litecoin right now. Okay, that's it for this review. I wish you all good trading, and hope you will watch my other videos. Subscribe and like if you want. And until the next one.